Hi guys, and welcome to a new episode of Koshkah'S Trading Academy. Today we're gonna see how to identify valid points of interest, or some people call it supply and demand or order blocks. So if you have any issues by identifying valid zones, watch this video because I'm gonna explain you how I personally identified with my simple strategy from A to Z. So first things first, we need to understand what is a valid point of interest. So exactly right here in front of me, I have this page that explains what is a valid POI according to my strategy. So we can read it together so we can have a basic understanding. So first things first, what is a POI? So in smart money concepts or SMC trading, a POI stands for point of interest, like I just told you. So it's a specific area on a price chart that traders focus on because it's a key spot where important price action could happen. So these points are important as well because they show where big players like banks or institutions are likely to have placed their orders and where price might react. So we can look for an entry opportunity there. So this is the basic main point about what is a valid POI. Now, how to identify those valid POIs? So let's just go over the theory first, and then I'm gonna explain you with a real chart, and we're gonna do some examples so you can then understand how to use them and how you can identify them well. So first things first, let's zoom a little bit more into this document. So we have right here my chart. But it's a screenshot that I took. So let's first of all read what is included, and then I'm gonna read you the criteria for a valid POI, and then we're gonna go on a trading view and we're gonna do some examples. As I have my POIs right here, I'm gonna show you how you can identify them nicely. So first things first, a POI is up to 3 selling or buying candles before a move that caused a fair value gap or an imbalance in price. Okay, so as you can see right here, it needs to be as well the opposite color candle. So what do you mean by that is that exactly right here, see, this is a bullish POI and we have 3 white candles, and then overall the move is bullish, so we're looking for buys. So those bearish candles will be your POI. It cannot be your blue candle right here. It's impossible. A POI cannot be the same color as the move. So in this case, as we're bullish, your POI cannot be a blue candle. It needs to be the opposite color candle. It's really, really important. So as you can see as well, a POI have different criteria. So first of all, it needs to be connected to a fair value gap or an imbalance. It needs to be unmitigated, and it needs to be down or up at least 50% of the Fibonacci range. So let's take a look right here. So as you can see right here, we're pushing to the upside, right? So this, we had 3 candles. So let me just zoom a little bit. So right here we had 3 consecutive candles. That was as well connected to an imbalance in price exactly right here. So this is a valid POI, and this valid POI was valid until it got mitigated. So when it got mitigated and we had a reaction, the POI is no longer valid for a second mitigation. So you see later on right here, the POI just failed. So it reacted once, and the second time it came back into this entry, it just completely got destroyed. That's why it's super important for it to be unmitigated, for it to be valid once. Here we have another example of another bullish POI. In this case, it's only 1 white candle because we cannot include more than 1. Why? It's because in this case, there's no other candles that are consecutive. So as you can see right here, it's up to 3 buying or selling candles, but they need to be the same color and consecutive. So in this case, we have white, blue, white. So our sequence is broken. So this means that this POI is only valid if you include 1 candle. And again, same thing, it's right here connected to a fair value gap. So this is everything you need to know for the basics about a valid POI. And as you can see right here, the POI got mitigated and we had again an amazing reaction. Okay, so now it's the time to practice how to identify valid POIs on a real chart. So we're gonna go together through some examples, then I'm gonna show you how you can combine it with my simple strategy, how to use those POIs. So first things first, what you need to do is really, really simple. You need to inspect the market, and you need to understand if you're bullish or bearish. In this case, we're bullish, right? We're pushing to the upside by breaking structure multiple times to the upside. So we're gonna be focusing on bearish candles for our POIs. So in this case, first of all, you identify your range. This is your last break of structure to the upside. So this is your low, this is your high of the range. And remember, we have a rule for your POIs to be below the 0.5% of the Fibonacci. So you take your Fibonacci from the bottom to the top. And as you can see right here, you have an opposite color candle, as you can see in this push up. So we can identify this one and see if it's a valid POI. So first of all, it's an opposite color candle. And let's see now if it's connected to a fair value gap. In this case, yes. So if I take this candle, and this candle, we have a fair value gap on the candle number 2 exactly right here. And these two boxes are connected to each other, so it is connected to a fair value gap. Now, let's see if this POI is below the 0.5. In this case, yes, it's below the 0.5, and as well, it's unmitigated. So this is a completely valid POI where you can look for an entry. So for our POI exactly right here, this is a valid one. So let's see what's gonna happen next. As you can see, price just tapped into the POI, and we had an incredible reaction from that zone. So now let's look for a bearish POI. So this is when your bearish range is ongoing. That means that your structure is bearish, meaning that you're looking for some sells, right? So same thing, you're gonna identify first of all your last break of structure downside. In this case, you can have this one right here, and you have as well this one right here. So this is your last two ranges. So you can identify your POIs in that range and one range before that. So same thing, what you're gonna do is first of all take your Fibonacci from the bottom to the top. I'm sorry, in this case it's from the top to the bottom, and you're gonna again identify all your valid POIs above that level. So everything right here is valid. So everything right here is valid for identifying valid POIs. So now you're looking for some bullish candles. As we're looking for sells, your POI is the opposite color candle. So in this case, your like bullish candles will be your POIs. So in this case, as you can see right here, I have a bullish candle exactly right here. So this is a POI. And there is nothing else. As you can see in this push down, we only have white candles, so none of it is a valid POI. But if I push higher, oh, here we have some candles. As you can see, we have 3 right here, and we have some 2 other ones on top. So now let's see which one of those are a valid POI. First of all, if we take this extreme 2 candles on top, we can see we have already a problem. First of all, this doesn't contain any imbalance or fair value gap connected to it. So as you can see, first of all, it's wrong because there is a little fair value gap right here, I guess, but this is already mitigated. That's because price already came up, tapped into this area, and then pushed down. So as you can see, this POI was already mitigated. Even if there was a little fair value gap by the time, now there's nothing because everything has been mitigated and the POI as well got mitigated. So this POI is no longer valid. Same thing if I take only the extreme candle. Now, if we go in this area right here and I zoom in, if you take only, okay, one candle, if you take only this extreme candle right here, there is a problem. The problem is it's not connected to a fair value gap or an imbalance. Now you will tell me, but yes, it is. If you zoom in, you might think that right here we have a little fair value gap, right? So this is the fair value gap, and you have the POI here, it's closed, so it's connected. No, that's not true. Why? Because I want the 2 boxes to be connected with each other, so there is no space between the boxes. In this case, there's a space between the boxes, so this means that this is not good. However, remember, a POI can be up 3 consecutive same color candles. So what happens if I add another one? If I add another one, as you can see right here, now we do have a little imbalance between this wick and this wick, so this is a valid POI. But same thing, what happens if I add another one? Because this is up to 3, now we have only 2. If I add another one, same thing, it's still valid between now this wick and this wick, so this is an imbalance, and same thing, this is valid. So now you will ask me, okay, but should I take only these 2 candles or should I include all of them? My answer to that, as a lot of people are asking me why I include more than 1 candle into my POI, it's because sometimes it happens that price will come here, tap into this box with the 3 candles, and then have a reaction. If you included, for example, only the refined version, you might miss the trade, you know, so you might get tapped into nothing and miss the trade, right? So that's why I rather include more candles inside my POI and not miss the trade, even if my zone is bigger, than having a really refined zone and miss the trade. So in this case, let's see what's gonna happen. So first of all, we have this POI that price didn't react from, but this is normal. We're gonna see later on how to verify if a POI is good to enter or not. So this one, as you can see, got completely destroyed. So this happens, you know, not all POIs will get a reaction from. And in this case, as you can see, price pushed up, we swapped some liquidity, and later on price had an amazing reaction to the downside right here. So you could have got a trade in this area. So yeah guys, that's pretty much it, how to identify the POIs themselves. Now let's see how to look for confirmation inside of those POIs. So of course you will not straight away enter right here like with your stop loss above the high targeting the low, because as you can see sometimes there's liquidity sweeps, like price as you can see right here swept the liquidity. Here as well we got swept. So you're not gonna straight away enter at a POI right here. You will wait for a confirmation, and the confirmation that I personally need to see is a 15-minute break of structure / change of character to the downside. So in this case, as you can see, price tapped into the POI first in this area, and in this case this is the low that I personally needed to wait to be broken, to wait for my confirmation. That is a 15-minute, as you can see, change of character / break of structure to the downside. And then after I have my change of character to the downside, this is when I can look for an entry, either from a new extreme POI in this zone, either for a POI before the most extreme one. So let's do a trade example right here on how you can implement those POIs into your own entry. So first of all, same thing right here, we're gonna identify that we are bullish, so we're gonna look for bearish candles for our POI. In this case, same thing, we're gonna take our two most recent ranges, in this case this one and this one, so your POIs can be getting identified here and here. First things first, you're gonna take your Fibonacci from the bottom to the top, so we can measure this range and everything below the 0.5, so all of this zone you can identify your POIs there. So first things first, we're gonna identify the POIs in the current range. So in this case we have a 4-hour POI exactly right here. This is the opposite color candle, as you can see, below the 0.5%, and it's as well connected right here to a little fair value gap. So this is our valid POI, it's as well unmitigated. If I go in the bottom right here, I have as well this extreme right here for our POI with only one candlestick, as you can see, but there is another one, so I'm gonna include another one, as both of them in this case are valid. So we have as well a little imbalance exactly right here, and it's as well unmitigated, so that's perfect. Now same thing, I'm not gonna straight away just enter right here my stop loss below the low right here, doesn't make sense. I need a 15-minute change of character / break of structure as a confirmation. So let's see what's gonna happen. So price tapped into the POI, as you can see right here straight away. So this is when I'm gonna go on the 15-minute to wait for a confirmation. In this case, this is the high I need to break, as this is the last break to the downside, but let's see if we have anything else instead. So in this case, let's see what's gonna happen. So we're consolidating multiple times right here before breaking structure to the downside instead. So now we have a new high that we need to break. Now it's this high that we need to break, as we're following our ranges and our structure. And then same thing, instead of breaking through the high, we broke through the low twice. As you can see, we broke it here and again here. So the high we needed to break was really just this small one right here. So straight away after this break of structure, I'm just gonna again identify my new most extreme POI now in this new range from this low to this high, and that's it. I just enter my limit here. Now I got my confirmation, so now this higher time frame POI can react, and I'm entering on the lower time frame, stop loss below the low exactly right here, and I'm adding a little bit of extra pips to the entries. And in this case, your take profit final, you can just target the overall high right here for a 1-to-4 risk-reward ratio. So let's see what's gonna happen next. So as you can see, price tapped into this entry perfectly right here and straight away afterwards pushed to the upside, and that way you as well avoided a loss because you waited for an extra confirmation. If for example you just straight away entered at this POY and you place your stop loss below right here, you could have get stopped out as you can see, but as you waited for the liquidity sweep and the extra confirmation, you had a win instead. So that's it guys, this is how you can identify a valid POY and combine it with the 15-minute change of character confirmation to look for good entries. And if you have any questions, don't hesitate to just ask them in the comments. I as well made a full video about my full SMC strategy on For Traders YouTube channel, so I really recommend you to go watch it after this video. And after this video, I'm sure that you now understand how to properly identify valid POYs according to my strategy and that you can implement that in your own trading. So guys, thank you for watching this video and I hope you enjoyed it. Don't hesitate as well to subscribe to For Traders YouTube channel, like and share this video with your other trader friends. That way everyone can know how to properly trade and identify points of interest.